One topic that comes up often in talking with sellers, that is, or potential sellers, is that they have a strong preference. They have a hope to have someone moving into town from out of town with a bag of cash because they want to sell their house to a cash buyer. They want an easy close. They want it to go quickly. And fortunately, only about 19% of all sales during the last 4 months of 2023 went to cash-only buyers. The rest of the sales involve some sort of financing. There's some things to keep in mind when you actually do sell to a buyer who has cash. Let's say you put your house up for sale. You hope that you can sell to someone with cash. You want to have a quick close, you want it to be easy. You have all these preconceived notions about how much easier it'll be to sell to somebody with cash. But there's some things to keep in mind just to put it into perspective, to keep things realistic as you go to sell your house. Of course, selling to a buyer with cash avoids some of the potential downfalls of getting into a transaction in which you're selling to a person who's using a loan. One potential downfall that sellers seem to be afraid of is that somehow, for some reason, the appraised value of their house will not be high enough to support the sales price to which a buyer using a loan might have agreed. They're afraid that if they sell their house to a buyer using a loan, that if it doesn't appraise high enough, that the buyer would be able to cancel the purchase. While that is a risk, it's not a risk that plays out very often. I bring this up just to point out that having a cash buyer doesn't solve all the potential problems that may come up, even ones involving an appraisal. It's often the case that people who buy a house with cash might be a little bit tougher during the inspection period. They might be a little bit more demanding, knowing that the seller has a strong preference for a buyer who is using only cash. Overall, it's important to evaluate the strength of the buyer. It's possible to get some insight from the buyer's lender as to whether or not the buyer really is qualified for the loan that the buyer is supposedly pre-approved for. That is something that should be done if you are evaluating accepting an offer coming from a buyer who has a loan, if you also have an offer from somebody who would use all cash. But I wouldn't heavily discount, and this is my opinion, I would not be willing to take a much lower offer from somebody who has all cash in comparison with somebody who's using a loan, just because you're a little bit afraid or concerned about the possibility of the appraised value for your house being lower than what the sales price is. I don't see that play out and be an issue very often. The various types of loans, of course, that are out there do come around from time to time accompanying an offer, and those include FHA loans, VA loans, and then of course conventional loans. It is not the case that a buyer has to have 20% down payment saved up to use a conventional loan. And with that being said, a person using a low down payment, using a VA loan or an FHA loan, in the case of a VA loan, the borrower can use as low as a 0% down payment. It does not necessarily or at all mean that the borrower is not as well qualified as a borrower who's using a conventional loan and putting 20% or 30% or more down. That's important to keep in mind when you evaluate the strength of a buyer and the strength of an offer. It's important to consider, of course, the proposed sales price, the offer that the buyer makes, but there are other things to consider too, including whether or not the buyer is going to have an inspection done of your house, and if they are, and most do, whether they state in advance that they intend on not having any repairs done or not asking the seller to have any repairs done. Those are all things to consider when evaluating an offer. To put it into perspective, I looked at all sales of homes, single-family homes that is, in Portland over the last 4 months of 2023. I looked at all sales of single-family homes during the last 4 months of 2023, and this is what I saw. A lot of times sellers have this perception, or would-be sellers at least have the perception, that there are tons of people pouring in from California and from Texas and other places with bags of cash ready to buy houses, and that's not actually what played out. Over the last 4 months of 2023, what I saw was 19% of all single-family home sales went to buyers who used all cash. 69% of the buyers used conventional loans, about 8% of buyers used FHA loans, 2.5% used VA loans, and about 0.5%, and I was surprised by this, that it was actually this high, about 0.5% of all buyers used an owner-carried contract. That is a transaction in which the seller sells the house, of course, but they also are the lender to the buyer of the house. They carry a note, they are owed money over time, the buyer makes payments, and a prearranged prearranged way based on the contract that they agree upon to make payments over time, usually monthly, in a way that they would as if they had a mortgage, but typically for a much shorter time frame over the course of, say, a year or 2 years. And then a lot of times the buyer has to pay off that loan. I'm going to say what I have to say, and it's my opinion, but I'm going to do so with the heavy caveat being that I'm not a lawyer. Even if I were a lawyer, you haven't retained me to advise you. I cannot advise you about anything having to do with the law, but I do see some risks entering into a transaction in which you would carry a contract as a seller. What in effect you are doing is entering into a do-it-yourself, one-off, discrete, that is, business. You're making one loan, one time to one borrower in an area in which you typically don't operate. I worked in finance, an esoteric area of finance, for a long time. I got a master's with a heavy focus on finance. I would not make a loan to someone buying my house. There are plenty of risks to it. What if that, and we all have heard horror stories about people moving into a house as renters and then trashing the place. What if the buyer of your place stops making payments? What are you going to do? Well, yeah, you can call a lawyer. How expensive is that going to be? How long would it take you to evict the person and also basically repossess your house, foreclose on that loan? Do you know what you would need to do? Do you have an idea of how much it would cost you? What if they just become cantankerous and stop paying on the loan? Like I said, I can't go into all of it right now. I have a heavy bias against any transaction in which the seller would want to carry a contract and, in effect, become the bank on a do-it-yourself basis for one transaction. Out of all of the transactions, there were about 1,800 of them during the last 4 months of 2023. There was one that stood out to me. This was the most interesting one, and that is there was one VA loan that got assumed. If you are able to qualify for a VA loan, it could be possible that you could assume an existing VA loan from the seller who has a VA loan on their house. Now, what's interesting about that is, especially now that interest rates are a lot higher than what they were 2 and 3 years ago when rates were down at and below 3% for a little while, is that you might be able to assume a loan at a very low interest rate on a VA loan and make much lower payments than what you'd have to make to be able to buy that house otherwise if you were to use a loan. So that's something to keep in mind and to look out for in listings. It's not going to come up almost at all. I mean, given that the percentage of new purchases over the last 4 months of 2023, for example, included VA loans being used only about 2.5% of the time. So there are not a lot of VA loans out there, but it may be the case that there could be a house for sale that has a VA loan on it that you might be able to assume. Now that's a lot of mights, but the thing is the value of that difference between what you'd have to pay as far as a loan payment goes and what you would be able to pay if you could assume that loan can be pretty substantial as concerns the present value of that stream of payments. I'd be happy to work through that with you and in cooperation with your lender if you'd like to do so. So that's the reality of the chances of selling your house to an all-cash buyer, and that's the breakdown of the financing types that were used during the last 4 months of 2023. To put it into perspective, here is a graph of what went on month by month during 2023. As you can see, cash, conventional loans, FHA, and VA loans are all commonly used, with VA loans being the ones used least frequently, FHA a little more so than that. Conventional loans predominantly are the financing type used, and cash does form a substantial percentage of the total volume sold. But it is definitely not the case that there are hordes of rich Californians streaming over the border to buy up our houses with bags of money. That does not really happen.